What's good, everybody? Today we're gonna go over our one trade on NVDA today, and today we happen to take put options, and it was a good one. We're gonna hop straight into what happened. Why did we choose NVIDIA, and where did we enter, and where did we exit? So this is today's action that we're looking at on NVIDIA. You can see 930 was all the way up here at 115, 116, and we dropped straight down to 112, and we recovered and ranged for like an hour, right, at 112. Now at that point, I'm like, this is pretty bearish, but it could bounce, being that it had such a hard drop. So I didn't want to grab puts too early, but you could see that it kept on dropping. And if you would have respected this EMA as resistance, then you could have got a nice range break to the downside off of this 111.73 level. But I decided to hold out, and I let the stock drop all the way down to that 109 area, where I believe the market should have went to, or could possibly have a bounce. So I actually held out. You could see this was a nice scalp from 109 up to about 111.68. But I just watched it, just hanged out, watched the SPY, and I noticed that if NVIDIA was going to have a bounce in this area, then it should have bounced right around, I would say, from here to here. Now this is about 2 hours, 11 o'clock to about 1 o'clock, and when I noticed that we wasn't having a bounce, and these candles are still small, looking like there's still some selling pressure, right? That is just telling me this is more bearish than bullish, and it kind of contradicted my original bias of 109, 108 being the area that we're gonna bounce at. So it wasn't the easiest decision for me to grab puts, but the price action told me to grab puts, and then the market conditions told me to grab puts, and I just followed that, right? And I hopped in my Discord and told people at 1:59 p.m. Eastern that I'm grabbing NVIDIA put options, the September 6th expiration date, the 105 strike, right, for $1.06, which is gonna cost $106. All right, so for one contract, you could have got in for $106, right? And let's see, at 2:10, this is about almost 10 minutes later, 25% return on your money. So if you put in this amount, you would have got at least $25 back. About an hour and 20 minutes after, so 3:37, we had 52% on this return. So that would give you, over $50 on $100, about $100 contract. If you bought more than one contract, then you would be up $100, and so on and so on. If you bought 100 contracts, it's gonna work out, the same math. And that's the beauty of trading, is that if you simply follow the right technicals, understand how to read the chart, understand how to manage your risk, and know when is the right time to take profit, you can make as much money as you want, really. And it comes down to you being able to manage your own mind and emotions. That's the barrier that most people have issues with. It's not the technical stuff as much as you think. Is more the, hey, how can I stop being greedy, and other psychological issues. But you say issues, but I would say more like it's habits that need to be changed, right? Some things might work outside of trading, it might work well in the business, but it might not work well in trading, because you got to learn how to lose, right? And that's the thing, you got to deal with the ego, right? So we'll eventually make a whole video all about psychology. But we're gonna hop hop back into the NVIDIA trade, and you could see from the Discord that I sold 2 times, right? Now 3 contracts is a great amount to have for any trade. That allows you the ability to scale out as you're in the trade. In this one, I'm swinging the runner on NVIDIA, so still in a position, and we're letting it fall. All right, we're just letting that thing drop. And after hours, well, when I closed, well, market closed, it was about 107. You could see 108 was the closing price on NVIDIA, and right now the stock is trading at 105.30. So we bought it when it was at about 2 o'clock, 159, this candle right there at about 109. So we had the 105 strike, and it doesn't have to reach 105 for us to make money, because as it was going down, you could see we was up 25% in 10 minutes, even when the price was at 108. And then we held it a little bit longer, and then we was up about 52% when it got to 107, and we had the 105 strike, which hasn't been hit yet. So you don't have to have the price of the stock hit your option strike, right? This one, it doesn't have to hit that number in order for you to make money, right? We're just holding on because the setup is telling us that we have more room to drop. So why not? And that's for the intraday action. Now, if we're gonna see the bigger picture and understand why exactly I took the trade, we're gonna have to hop on this daily chart. All right, before we was on the 5-minute. Now this is a cool thing. If you take a look at this 9 EMA, notice price was under it the whole time. That would have been a good signal for bearish conditions. Here it's choppy, so can't really blame you. But if you go to the 15-minute chart, you can see that the price never got above this 9 EMA as support. All right, couldn't even close above it. It got close there, couldn't close. Got close there, couldn't close. There's some crazy stuff there, and it's respecting it. And that's how you could use your moving averages to help you take trades and stay into trades, or know when to get out of trades. All right, so know the time frame that you want to use for the type of trade that you are taking. Could be a scalp, day trade, swing, investment. All right, you're gonna have to look at different time frames for each of those. All right, so we're on the daily time frame, and if you back up, you could see that we had a big push up, and then we curled back into that same area, creating a lower high, which sent us down big time, right, to $90, pushed back all the way up, and consolidated for a long time, right? Long time. Now I was saying it makes sense for it to drop because this is a lower high like this one, and you can see what lower highs does. Drops the market. Lower highs drops the market. So being able to spot them early gives you more of an advantage to make more profit and less risk on your trade. If you time it right. Now this was today, this one huge day. So I'm looking at it from this action. These are 2 different days. This is 1 day. So it dropped, but it dropped at the 50 EMA, which is very strong in my opinion. But the thing is, with the length of this wave going up and this small little drop here, I felt like the market was trying to trick people a little bit. Like, just a little bit, right? I'm like, why you ain't? Okay, well, technically you did close under that, so I can't really say you didn't. But this higher low kind of will fool people into getting into the market, thinking it's going to bounce at this yellow line. And notice the market opened up lower and it's dropped it hard. So whoever bought here, they're in the red when the market opens. And most likely those are part of the people who's selling their shares, affecting this price to go down. And you still have a lot of people who bought, and that's why I was saying I felt like the market was going to come back down, because this was a sharp move up, and I just feel like there's more orders in this area. Just simple order flow that I feel like the market makers would want to come back down and grab some more orders, even if you want to go back up. But on the other side, there's reason for it to come down because you have this lower high. And you could draw a bunch of stuff. You could just start drawing like a trend line and say, okay, well, we expected it to go down because it couldn't hold the trend line and it's gonna go down. Couldn't hold this 50 EMA, it could go down. Now notice the volume here. It tells you what's going on as well. The volume here, right, is pretty low compared to the volume here. So the volume will tell you if the push in price if it has a high magnitude towards it, right? If this is low volume, then I'm seeing this pullback as something light, right? Now, if it has high volume, then I'm seeing it as something heavy. A lot of sellers coming in, which is making me have more of a bias that the price is going to continue falling down rather than it just being a pullback and pushing back up. So all these little factors, you guys could take my course if you want to learn a little bit more, or if you want to learn everything about how to first read the chart, right? You got to start with baby steps, and then learn how to draw your levels, and then understand how the price interacts with the levels, so you can understand when is the best chance for price to either go down past the level or go up past the level. And that's really how I simplify the trading, is just finding the right levels and trading off of that. But to even make the probability higher and have better accuracy, we actually study what's going on, right? We actually want to study what the volume is doing, right? Study the trend and go to different time frames. And all of this, right, is going to help pinpoint the right area and the right time. But it's using the same exact things that you use for every single time frame. You're not going to really switch up what you're doing just because it's a different time frame. But EMAs, right, volume, the price, levels, that's really most of what technical analysis tools comes down to for the foundation. And you can make a lot of money just learning how to use those tools, right? So that is NVDA, right? We could look at the overall market and see what's going on. We got SPY had a crazy, nope, that's not SPY, this one. Yeah, SPY had a crazy move down, all the way from 562 to 550. Now this is a crazy story, right? I actually took like a little lotto play at the end of the day for like 7 cents a put, and it wasn't moving. So I'm like, all right, I could let it expire because it wasn't really nothing. But I'm like, let me work on my habits and just stop out. So I stopped out at like 4 cents. So I only lost like 3 cents off of it. And like 10 minutes later, no, maybe like 5 minutes later, it took a big move down. And that's whatever, 7 cents turned into like 58 cents, something crazy. All the way down to, I had a 550 strike from like 552, 553 area. So that was funny. But yeah, we got QQQ pushing down as well. Apple had a little bit of a push down. Let's see what else. Kava was one that I was watching, and notice this is a great zone, and this is something that told me the market wasn't trying to bounce. The market was not trying to bounce because they should have took off, right? Just watching the market lets you know what stocks are reacting bullish, what stocks are reacting bearish, and that's going to help give you a higher conviction on the direction. All right, you got coin. I called it out on my watch list on Thursday, and decided to pop down the next day and went straight down ever since, right? Coin kind of represents Bitcoin, and Bitcoin kind of moves with the overall market to a degree. So, these are like little hints, little signs that's telling you that the downside was coming. The downside is here, right? Now, tomorrow we'll see if they're going to continue that downside or if they're going to catch people with a move up. And even if you catch people with a move up, I think this pressure is pretty heavy, right? It's pretty heavy. So, yeah, we're going to have to check back in and see what happens tomorrow and the rest of the week. So if you guys want to learn more, I have my online course dropping next week. It's going to drop September 8th, and that's going to be the start of the 6-week mentorship. And if you want to join, you could check out the link in the bio. If you want to join the Discord where I call out these plays, link in the bio. And if you haven't subscribed, check that subscribe button out, and see if you want to push it, right? Because you don't want to miss these videos, and you want to make sure you like that button and leave a comment if you like what you see. So I'll catch you guys in the next one. Peace.